I've said it before, and what I've said is make data-driven decisions in the self-storage business. But it's getting very hard. Let's talk about that. My name's Mark Helm, and I'm the author of Creating Wealth Through Self-Storage, and I'm the creator of the Quick Start Academy. And what I do is I support the small investor who wants to get in the self-storage business or who wants to grow their self-storage business, strategically do so in a way that creates true wealth and a fulfilling career. And no doubt about it, we have a lot of data in the world today. Too much data, in my humble opinion. I really think we need an entire new industry. I think we need a new industry that collects data on the companies that collect data. And we can see how the data collection companies are actually doing it. So what I mean by that, let's look at an example. One of the big real estate companies that we all know about, they sell a lot of product types, office, retail, industrial. One of them is self-storage, and they collect a lot of data on the self-storage industry, produce a lot of data on the self-storage industry. You've seen me quote it numerous times. Many people do. But if my new industry existed and you looked up how this company collects data, you'd find some interesting things. So let's say you're looking at a market, let's say Nashville, and you're trying to determine how healthy that market is. One of the things you might do is look at the vacancy rate in self-storage, and you might see something like 10%. Maybe even less right now. But you would get an industry report from this company, and one of them would be the vacancy rate in Nashville. And then you go to my new industry and look at how that data was collected. And you find something very interesting. What you'd find is that only facilities that are stabilized, those are the only facilities that are ever used when you're collecting vacancy rate data. So if you've got an expansion or a new project in lease up, those units are not included in the vacancy rate. Now, I'm sure there's people way smarter than me that know the reason why you should do that in a vacancy report. I'm pretty simple-minded. I would just take all the available units in that market and how many of those available units are rented, and what's left over is the vacancy rate. But I guess there's another methodology behind it. Maybe the number would just be too low. I don't know. But I do know that how that data is collected has a huge impact on the number that's spit out from that data, and then how you would interpret that data. I might interpret it in a very different manner if we had all the units in a market area as opposed to just the stabilized ones. Now for me, it's getting harder and harder to just accept the data that I'm reading and the interpretations that we're getting from it. It's making me sound to myself like a very cynical person, and I don't like that. I don't like sounding cynical. I certainly don't want to be cynical, but I'm really beginning to question a lot of the data that's coming at me, especially with the onset of coronavirus and COVID-19. There's a lot of webinars going on right now with a lot of data being thrown around. And it's getting to the point where I have a hard time even hearing it. Let me give you an example. I was on a webinar last week, and I heard that in New York, the supply pipeline increased by 70 basis points. That sounds real bad. And it increased by 70 basis points to hit 17.7 of existing stock. In other words, the new facilities in the pipeline in New York represent 17.7% of the existing stock. That sounds very bad. And then the very next sentence was that the square feet per capita in New York is 3.3. Wow, that sounds very good. But then I learned in the next sentence that street rates had fallen 5.1% for a 10 by 10 in that market. Now, let me ask you a question. Is that a healthy market or not? And falling street rates during COVID-19, I really loved that one. So, how do you think street rates are determined? Well, the best I can figure out from trying to research how it is from websites. And whose websites do you think most of that data comes from? Well, probably the REITs, because it's easy to get. And what do REITs do with pricing? They have dynamic pricing, don't they? And we all know that the pricing that the REITs use are really artificially low on the web, trying to get people in, and then usually within a 3-month or 4-month period, they've had 1 or 2 price increases so far. So what is the real street rate? If you were trying to make a pro forma of one of our facilities from what's on our website, the rates being quoted, the pro forma you would get is way different than what we would actually be getting. Yes, we will lease units at whatever discount price we may have on our website, but that's only for a certain number of units. And we have the same unit, much more expensive, closer to the door, closer to the gate, but yet you won't see that on our website. So when you hear street rates have fallen 5.1%, many people go straight into action and start making decisions and pricing decisions based on that data, never questioning how is that data collected? Does it really mean that? Yes, very often this data points to a trend or a direction something's moving in, but I don't think I would want to be making real pricing decisions in the moment based on data that's collected just from a few REIT websites. I don't think that gives me a clear enough picture of what's really going on in that marketplace. But you don't hear anybody talking about that. So the 2 big problems with the data today are how it's collected and then the interpretation that we get from the data. So let's talk about the interpretation a minute. I really think that the fortune tellers of today are the prognosticators from all the data that's being collected. In the old days of yesteryear, you might throw some bones out on a table, or you might read the tea leaves to determine what's going on. Nowadays, you just use data. Now, don't get me wrong, you got to use something. But to definitively say that the industry is moving in this direction because street rates have fallen 5.1% without qualifying it in any way at all, in my opinion, is very misleading. I mean, think about it. Something as non-controversial as square feet per capita. Let's think a minute. How is that data really collected? Well, first of all, you have to have census data. Where's our census data coming from? Well, today is probably from the 2010 census data collection that has been extrapolated forward based on information they had in 2010. Do you think that a market could have really changed fundamentally since 2010? Boy, I'll be glad when the 2020 census data that's been collected is starting to be used. At least I think I will. Do you think that 2020 census data is correct? I mean, I filled my form out in order to get my PPP loan. Did you? I wonder how many people didn't really fill that form out, or didn't necessarily fill that form out right. You know, a lot of people, for whatever reason, are really mad at the federal government. And I've heard a number of people who just don't want to be giving the government any more information. Now, we got to use something. But I think it's really important to begin to get real clear on how that data is collected, who are the sample groups that data is collected from, who's collecting the data, and then to be interpreting how an entire industry is moving or what's actually going on in the market today without qualifying any of this stuff, in my opinion, at best, is misleading. I really think as business owners, it's in our best interest to start digging a little deeper and start questioning a lot more. How is it collected? Who is collecting it? Is it just the REITs? I mean, it'd be good to get a snapshot of what's going on at a moment in time with the REITs. But if you can put that information in the context of what it really means for the whole industry and not just blanketly draw conclusions that the industry's street rates are falling 5.1%, I'll make a bet with you. I would bet almost anything that street rates are probably going down. I'll bet any amount you want to come up with that the exact number is 5.1%. The odds of it being that number are minuscule. At best, I think this data may be pointing in specific directions. At worst, it's just a snapshot of a few companies at a given moment in time. But yet, these statistics are bantered around like the truth. And the prognosticators today are telling us from this data which direction the storage industry is going. Start thinking more for yourself. As business owners, we owe this to ourselves to really begin to question the data. Very often, the on-the-ground reality of what's going on in our facilities doesn't necessarily match what the data says is the square foot per capita. I'm beginning to notice that more and more. It really makes me begin to question that census data. So we're swimming in data today, and for most of us, it occurs like we don't have enough time to really research how's that data collected. Let's just use it because we've got to use something, right? Well, my coaching is dig a little deeper. You don't want to be making flawed decisions based on flawed data. Really look closely at it and draw your own conclusions. Research data yourself. If you're trying to get the street rates in a particular submarket, half-hour worth of phone calls will really tell you. So perhaps we should start that new industry, data on data collectors. After I get that industry in place, I'm going to take on the political industry. I'm going to create an industry that every time you hear a politician talking, behind them on a screen will be rolling all of the corporate donors to that politician so that you can begin to get some of their policy decisions in a different context. So that's my thoughts today on all this data that we have. You've got to use something to make your decisions. Just dig a little deeper for yourself and don't take on face value just what that data says. Find out more about that data. So thank you very much. My name's Mark Helm. I'm the author of Creating Wealth Through Self-Storage, and I'm the creator of the Storage World Analyzer. That's the financial analysis tool that we use as we're looking at facilities that we're going to be buying, expanding, constructing, It's a great tool to project the cash flow, future cash flows of these projects. If you're using Excel, great, but I really invite you to take a look at the Storage World Analyzer. I think it could really support you if you're growing a self-storage business. So thank you very much, and I look forward to being with you next week.